Hey everyone, welcome to Alpha Insights. I'm Jordan.
And I'm Mike. Nice to have you with us. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
Today we're breaking down POET, the small cap silicon photonics company that a lot of analysts still like, even though the financials are mixed, to say the least.
Right, the market's giving them credit for potential, but the business hasn't yet shown the revenue that justifies that optimism.
So quick snapshot. POET is trading around $6.32, with a market cap of about $550 million. They've been working on integrated photonic circuits and packaged optical modules for data centers and telecom.
In plain English, they try to replace parts of electrical wiring inside data centers with light-based components to get higher bandwidth and lower power. It's a technology people want, but getting from lab to mass production is hard.
Exactly. And the recent numbers show how hard that transition is. They reported a quarterly loss per share of 32 cents, and revenue was only $341,000, which missed the roughly $400,000 estimate. On a trailing 12-month basis, revenue is still under $1 million, and earnings per share are negative about 65 cents. So this is far from a commercial revenue story right now.
Yeah, that's a good point. I mean, when you look at the statement from management, it's all about pilot programs and integration progress. But pilots do not equal recurring bookings.
Right, and the next big milestone for the stock is the upcoming quarter. They have earnings after the market close on May 12th. Analysts and investors will be watching closely for any sign that pilot work is translating into steady revenue.
One important thing people ask about is cash. The balance sheet shows a current ratio near 2.3, and management says there's cash in the tens of millions of dollars. That gives runway if burn is controlled, but it's not infinite. So the real question here is execution. Can they scale manufacturing and convert design wins without tapping capital markets too soon?
That's the crux. Valuation-wise, the stock looks expensive on a price-to-sales basis because sales are tiny. One of the numbers floating around is a price-to-sales near 721 times, which is driven by negligible sales, not profits.
Analyst sentiment is interesting. Coverage is small, only about 7 analysts, and the consensus is tilted toward strong buy. But that base is shallow, and the mean price target sits around $6.93, only a single-digit percentage above today.
So the market is pricing in a revenue inflection that hasn't happened yet. Scenario-wise, some analysts sketch a base case near $6.50 if pilots become modest recurring revenue, a bull case up near $9 if they scale production and get OEM deals, and a bear case around $3.50 if execution stalls.
Interesting.
There are also technical points traders watch. Support levels around $5 and the low near $3.09. Resistance roughly at $7 and the prior high at $9.41. The name bounced hard from that low, so there is momentum among speculative buyers. But it's still well below the high, down about 33% from that peak.
And don't forget the competitive landscape. There are bigger players in photonics and optical components, plus chip makers targeting the same data center connectivity spend. That increases execution risk. Larger partners could grab share quickly.
Totally. On the flip side, POET has proprietary integration and packaging know-how, and being small can let them iterate faster on prototypes. If they nail a foundry or OEM partnership, adoption could accelerate.
Honestly, I was a bit surprised by how polarized the story is. A handful of optimistic analysts versus a stretch on current fundamentals. It feels like timing risk more than technology risk right now.
Yeah, that's a good point.
For listeners who follow this name, useful things to watch are clear. Quarterly revenue trends, any customer or design win announcements, updates on manufacturing scale, and commentary about cash runway or planned capital raises.
Analysts also flag that the next report could be volatile around the May earnings date. Expect swings if management reveals a revenue run rate change or new customer commitments.
Quick reminder, this discussion is informational only. We're laying out the facts and market views, not recommending buying or selling. Analysts note the optimism, but the company still needs proof of commercialization to justify current expectations.
Okay, let's summarize our key takeaways together.
1. Poet is a promising technology story, but revenue is still tiny and losses are recurring.
2. The stock price reflects expectation of a revenue inflection. Watch the next earnings update and any conversion of pilots to recurring bookings.
3. Cash runway and potential dilution are real risks, and competitive dynamics could pressure execution.
Got questions? We'd love to hear from you. Head over to stockalpha.ai where you can ask us anything and we'll answer live. And while you're there, check out more market content.
Thanks for listening. We'll be watching the May earnings and talking about any updates on the next episode. Talk soon.